In this presentation, we're going to enter an adjusting entry related to an invoice or accounts receivable or income. Last time we set up the problem related to the invoice or income, us having entered an invoice after the cutoff date for which the work was done before the cutoff date, and therefore we need an adjusting entry to bring that income into the current time period, which is going to be March before the cutoff date. Then we'll need a reversing entry to bring it back to where it was so we don't have it duplicated in the following month, in the month of March. In this section, we'll enter that adjusting entry. Here we go with Xero. Here we are in our Get Great Guitars dashboard. We're going to be opening up our balance sheet and income statement, going to the accounting dropdown and going on down to the balance sheet. Once it has opened, we're going to go to the tab up top, right click on that tab, duplicate that tab. Let's go back to the first tab, do the same thing for the income statement, going on down to the accounting dropdown to the income statement, or one of our favorite financial statement reports. Once that opens up, we're going to do the same thing, duplicating the tab, go into the tab up top, right clicking on it, and duplicating that tab as well. Let's go back on over to the balance sheet. We're going to be changing the date. I'm going to pick the date up and we're going to go all the way to March. Now remember, the cutoff date is as of the end of February, but we're going to go up to March here because we entered a transaction in March, that being the one that we're going to have to pull back into February. So we'll open that up for March. Then we'll go to the income statement, and I'm going to do the same thing here. We're just going to look at the month of March this time. It'll be easier to see on the income statement. So we're going to be going from March 1st to March 31st. That's what the month of March contains. The 1st of March through the 31st, like so. And then on the income statement, you'll see that this is the only transaction we have thus far. It's this one invoice that was entered into March. And what we're going to say here is that it should have been pulled back into February as we discussed last time. Now we thought about, so these are the accounts that are affected on the income statement. The accounts affected on the balance sheet will of course be the accounts receivable is affected in March when we want it to be going up in February. And then we have the payable for the sales tax payable as well, and then the inventory is affected because this is an inventory item. If we think of the journal entry, then we're gonna say, all right, here's the journal. Now, just you could think about, well, how could we fix that? You could just go in there and possibly adjust the date of the invoice, but typically you don't want to do that. Usually you want to keep it in there and keep the audit trail in there as it's going. Plus, the payment may have already been there, and the due date may be kind of tied to that invoice as well. So we'll keep it in there. And then typically we do the adjusting entry with a journal entry. So we're going to adjust the journal entry. So first we need to think about, well, what does the invoice do? This is what the invoice does. It's going to be a debit to the accounts receivable, a credit to the sales, and then a credit to the sales tax payable, a debit to cost of goods sold, and a credit to inventory. So what we're going to do is go into the current statement, and we're going to enter this information in a journal entry format. Now note, we might have problems with like a sales tax or the accounts receivable account because the system's going to say, hey, we don't like journal entries going to the accounts receivable because you need a customer. So we may need to work around with that. We may have to set up another account for accounts receivable to kind of represent our adjustment. So we'll have to deal with that as we go. So let's take a look at it. We're going to go back over. We're going to enter an adjusting entry. We're going to go to the first tab then. We're going to go down to the accounting. Let's go to the reports. So accounting and then reports. We're going to be under the accounting reports down here. So the accounting reports, we want to go into the journal report. Then we're going to add a new journal. So we're going to say add a new journal. I'm going to hold down control, scroll up just a bit. So we're at the 125, and this is going to be an ADJ entry, adjusting entry. This is going to be as of the end of our cutoff date, which is the end of February. So as of the end of February here, then we're going to have our entry down below. Now the first account is going to be locked because it's accounts receivable. It won't let us post to accounts receivable because they want a customer. So they only want the invoice related to accounts receivable. Therefore, we're going to have to create another account to kind of post to that we're going to tie to the receivable for our financial statement. So I'm going to go and I'm going to say, I'm going to look for that other account. Or look for an account number that I could put on it. So it looks like 1270 is here. So let's make it 1150 or something for the account number. Let's see if we can do that. I'm going to go up top. So let's see if it takes 1150. Okay, that's available. This is going to be an asset account, a current asset. So I'm going to put it into a current asset. and I'm going to call it accounts receivable ADJ. So it's an adjustment account. Now I'm going to combine them together so you can see them in the formatting standpoint. Well, they'll be combined together for the external report. So we'll see what that looks like. I'm going to go ahead and save that. So there we have that, and that's going to be the debit of the 547.50. So we're going to say debit 547.50. And next we have the sales. So sales is our revenue account. So let's say the drop down. See if we can post the sales. So we want this 400. That's going to be a credit of 500. So the 500, and then the difference is to the sales tax. So sales tax is the difference of that 47. Now I'm going to enter the other journal entry in the same entry here. So now I'm going to think about a cost of goods sold and inventory. Inventory is another item they might not let us post to because we need to track the inventory type. So we'll have to do the similar action that we did with the receivable. So cost of goods sold is going to be here. Cost of goods sold. And that was 400, I believe. 400. And then I don't think they're going to allow us to go with the inventory, right? They won't let us do that. So what I'm going to do is check the account type. I think it's, let's go 1155 for the inventory. So I'm going to add another account. We're going to say it's going to be the code 1155. The name, the account type is going to be an asset, current asset account again. The name, I'm going to say inventory ADJ. And so we'll combine that account as well. So we'll see what that looks like. So I'm going to say save. And there we have it. So that's going to be our entry. Let's see if this does what it should do. It should pull over the income to the proper time period and all these accounts into the proper time period. So I'm going to say, let's post this and then see what happens. Then I'm going to go to the balance sheet tab. I'm going to change the date to February. So February 29th and update that report. So February 29th. And then if we go down, we'll see that we got the accounts receivable here. And then it's going to be increased by our adjustment. So our adjustment's down below, and that's the total accounts receivable at this point in time. And then if we have the inventory is here. And then we have our adjustments decreasing the inventory side of things. So that's the net as of the cutoff date would be the net of those two accounts. Then if we go down below, we have the sales tax. So the sales tax will be included here within the liability. If we go into that account, we'll see that most of these sales tax items will be created with an invoice or basically a sales receipt, receive payment type of form. But this one should be in there with a manual journal. So that's in there with a manual journal. You can see it's a journal entry here. And then we're going to go back up top. The other side is going to be on the income statement. So if we go to the income statement and we bring this back to February. So I'm going to February 1st through the February 31st. And this is 2021. How did that happen? We're going back to, let's go 2020 for February and update that report. Then we should see in the income, in the sales item, we have in the sales, and we should have put it to merchandise. Notice I put it to sales here, and it should be grouped into the merchandise. So maybe I can adjust that. I'm going to go into the sales item. And then let's go down. Here's the item. There's the journal entry. Let's go into that journal entry and see if we can adjust that. I'm going to go into it, and then I'm going to go to the journal options up top. And let's see if we can edit this journal entry. And then let's just make this sales account. Let's go to the merchandise. So merchandise, similar process, but we'll put it into the merchandise as the proper grouping that we had. So I'm going to update that. And then let's create our income statement again, accounting dropdown, income statement. Then I'm going to change the date I want the end of February. I'll keep it at the January 1st, and then we'll go to the end of February. So we'll go to the end of February, the 29th, and update that. So there we have it. So now it should be in the merchandise. So if we go into the merchandise then, scrolling down, there's our journal entry. And then if we go back up top, then, and we go to the cost of goods sold. scrolling down to the cost of goods sold, we should have an increase in the cost of goods sold as well. Now, this makes it correct as of the cutoff date because we pulled this sale basically by journal entry into the cutoff date. Note that, so there it is. If I was to increase the date to March now, March, it's correct as of February because we pulled it into the proper period, but as of March, these two items will be in there twice. So what we're going to do is we're going to enter this in as of the cutoff date with a journal entry and then have a reversing entry that'll be in March. And then by March 10th, when this transaction actually happens, they'll nullify each other and it'll match out. So next time we got to deal with the reversing entry. This made it right as of the cutoff date. For this timing difference, the reversing entry will nullify the double entry kind of thing problem we would have here. So I'm going to go back, and then let's just take a look at the balance sheet and think about the reporting purposes up here. So for internal accounting purposes, this is fine. If I want to make this nice for external, I would like to combine these two accounts, which we can do with the edit option. So I can go down to the editing option here and say that we would like to combine these accounts. So like this one, I'm holding down Control, and this one. I'm going to group them together into one account called Accounts Receivable. Right, and then I can do that and then add that group, and then I'm going to do the same down for the inventory. This one, holding down Control or Shift, and that one, adding a group, and I'm going to call this inventory, and then I'm going to add that group, and then I'm going to collapse them, so like so, and then if I say done, now I can have that kind of sub account not affect the accounts receivable or the other reports related to accounts receivable that are going to be driven by customer, and still have our adjusting entries and then be able to present it nice and neatly rather than having to kind of export it and reformat it. So then I can have an internal report and an external report. This would be the external report. I'm not going to save it. It's not going to be saved like this next time we go back into it, but just so you note that you can have kind of like that other adjusting account and still format it nicely so that you can still give it to an external user in that format. So that's it for now. Let's get out of here.